Illinois Real Estate Exam Study Guide. Question 1. A licensee knowingly misrepresents a material fact to induce a buyer to sign. Which licensing consequence is most relevant during Riley's Moline small apartment building file review? Option A. Disciplinary action for unprofessional or dishonest conduct. Option B. Automatic zoning approval. Option C. A mandatory title insurance payout. Option D. A tax prioration credit only. The correct answer is option A. Disciplinary action for unprofessional or dishonest conduct. Knowing misrepresentation can trigger discipline because it harms consumers and violates professional standards. Zoning approval, title insurance payout, and tax prioration are unrelated remedies for this licensing misconduct. Question 2. Several liens are discovered before closing, including a recorded mortgage, unpaid property taxes, and a later judgment lien. Why is lien priority important during Avery's Quincy mixed-use storefront file review? Option A. Priority decides who may advertise the property. Option B. Priority determines the order in which claims may be paid from the property's value. Option C. Priority cancels the need for title insurance. Option D. Priority makes every lien disappear at listing. The correct answer is option B. Priority determines the order in which claims may be paid from the property's value. Lien priority affects the order of payment when property is sold or foreclosed. It does not control advertising rights, eliminate title insurance analysis, or erase liens merely because a property is listed. Question 3. A buyer purchases for $370,000, makes a 25% down payment, and has $5,300 in closing costs. About how much cash is needed at closing before credits? Option A. $92,500. Option B. $5,300. Option C. $97,800. Option D. $364,700. The correct answer is option C. $97,800. Cash needed combines the down payment and closing costs. 25% of $370,000 plus $5,300 equals $97,800. The other choices omit either the costs or the down payment, or subtract costs from the price incorrectly.
Stressed about your AccuPlacer exam? We can take AccuPlacer exam for you remotely and undetected. We always guarantee a pass and payments only after results. To send us an email, scan the code or tap the link in the description and let's get it done.
Question 4. A candidate is planning the broker exam schedule and wants to understand the Illinois specific portion. How is the state portion commonly structured in the current SCI bulletin during Drew's Belleville rental duplex file review? Option A. 100 questions with 150 minutes allowed and a 70% passing score. Option B. 50 questions with 120 minutes allowed and a 74% passing score. Option C. 90 questions with 150 minutes allowed and a 75% passing score. Option D. 40 questions with 90 minutes allowed and a 75% passing score. The correct answer is option D. 40 questions with 90 minutes allowed and a 75% passing score. The Illinois broker exam has a separate state portion listed as 40 scored points, 90 minutes, and a 75% passing score. The 100- question 150- minute format describes the national broker portion. The 50- question 120- minute option reflects residential leasing, and the 90- question format applies to a different examination category. Question 5. A landlord refuses to consider an applicant because of disability. What fair housing concept is most directly involved? Option A. Discrimination based on a protected class in housing transactions. Option B. A lawful appraisal adjustment. Option C. A title minus priority decision. Option D. A contract contingency automatically required by lenders. The correct answer is option A. Discrimination based on a protected class in housing transactions. Fair housing laws prohibit discrimination in housing based on protected classes. The situation is not an appraisal adjustment, title priority issue, or lender minus required contract contingency. Question 6. A rental property has NOI of $24,000 and a value estimate of $300,000. Approximately what capitalization rate is indicated? Option A, 4%. Option B, 8%. Option C, 11%. Option D, 12.5%. The correct answer is option B, 8%. The capitalization rate is NOI divided by value, so $24,000 divided by $300,000 is about 8%. The other answers have the rate, add unsupported points, or invert the formula. Question 7. Hayden passed the Illinois broker examination but delayed the license application for more than a year. What is the likely exam minus related consequence? Option A. The score remains valid permanently. Option B. The candidate becomes licensed automatically. Option C. The passing examination result may no longer be usable for licensure. Option D. Only a name minus change form is required. The correct answer is option C. The passing examination result may no longer be usable for licensure. The SI Bulletin states that candidates must apply for licensure within 1 year after passing the appropriate examination. A permanent score, automatic licensure, or a simple name minus change form would not satisfy the application requirement after the score validity window has passed. Question 8. Two firms agree that one will serve buyers only in Peoria while the other will avoid that area and focus on Naperville. Which antitrust concept best fits? Option A, valid escalation clause. Option B, leasehold estate. Option C, statutory redemption period. Option D, a market allocation. The correct answer is option D, market allocation. Competitors who divide territories or customers can create an unlawful market allocation scheme. Escalation clauses are contract tools, leasehold estates are possessory interests, and redemption periods relate to foreclosure law.
Are you looking for non-medical assistant exam actual questions? Visit our website pokerexams.com to access non-medical assistant exam study guide with actual questions and answers. Scan the QR code or click the link in the description to get non-medical assistant exam answer key today.
Question 9. A buyer obtains a loan of $220,400 on a property appraised at $290,000. Approximately what is the loan minus to minus value ratio? Option A, 76%. Option B, 24%. Option C, 86%. Option D, 61%. The correct answer is option A, 76%. Loan minus to minus value is calculated by dividing the loan amount by the appraised value, $220,400 divided by $290,000, or about 76%. The other percentages confuse equity with LTV or use an incorrect numerator or denominator. Question 10. An owner personally advertises and negotiates the sale of the owner's own vacant lot. Why is this usually treated differently from brokerage for others during Quinn's Bloomington 2-flat building file review? Option A. Every owner must hold a broker license before signing a deed. Option B. Owners may generally sell or lease their own property without acting as licensed brokers for the public. Option C. The owner is automatically sponsored by the buyer's broker. Option D. The owner may collect commissions from other sellers without a license. The correct answer is option B. Owners may generally sell or lease their own property without acting as licensed brokers for the public. Real estate license laws typically regulate brokerage services performed for others, especially for compensation. An owner selling the owner's own property is not thereby representing the public as a broker, while licensing would be required to collect commissions or broker transactions for other owners. Question 11. Taylor prepares a price opinion for a seller in normal to help set a listing price. Which limitation should be remembered? Option A. A CMA always creates a guaranteed sale price. Option B. A broker price opinion transfers title. Option C. A CMA or broker price opinion is not the same as a formal appraisal by a licensed appraiser. Option D. A CMA eliminates all disclosure duties. The correct answer is option C. A CMA or broker price opinion is not the same as a formal appraisal by a licensed appraiser. A CMA or BPO can help estimate market price for brokerage purposes, but it is not a formal appraisal. It does not guarantee a sale price, transfer title, or remove disclosure obligations. Question 12. A borrower pays 1 discount points on a $180,000 loan. How much do the points cost? Option A, $900. Option B, $2,800. Option C, a different result not supported by the facts. 3. Option D, $1,800. The correct answer is option D, $1,800. 1 discount point equals 1% of the loan amount, so 1 points cost 1% of $180,000, or $1,800. The other figures use too few points, only 1 point, or add an unsupported amount. Question 13. Rowan posts a social media ad for a listing near Carbondale using only a personal phone number and no brokerage identification. Which issue is most likely raised by Illinois advertising rules? Option A, real estate advertising must identify the sponsoring brokerage in a compliant and not misleading way. Option B, a licensee may advertise without any broker identification online. Option C, only print advertising must identify a broker. Option D, brokerage identification is unnecessary if the property address appears. The correct answer is option A. Real estate advertising must identify the sponsoring brokerage in a compliant and not misleading way. Illinois advertising expectations focus on protecting the public from misleading ads and making the sponsoring brokerage clear. Online ads are still advertising, and the property address or a personal phone number does not replace proper broker identification. Question 14. A landlord uses a consumer credit report to evaluate Reese's rental application. Which law commonly appears in property-management screening questions? Option A, Truth in Zoning Act. Option B, Fair Credit Reporting Act. Option C, Statute of Frauds Only. Option D, Uniform Commercial Code Bulk Sales Rules. The correct answer is option B, Fair Credit Reporting Act. Tenant screening that uses consumer credit information implicates the Fair Credit Reporting Act. The other choices do not specifically govern consumer reports used to evaluate rental applicants. Question 15. Annual property taxes are $3,600, and the seller owes the buyer a credit for 60 days using a 365-day year. Approximately how large is the credit? Option A, $300. Option B, $10. Option C, $592. Option D, $1,184. The correct answer is option C, $592. Daily proration divides $3,600 by 365 and multiplies by 60 days, giving about $592. The other choices use 1 month, 1 day only, or double the required prorated period. Question 16. A listing broker learns of an unpermitted bedroom conversion before a buyer submits an offer. How should the issue generally be treated in an Illinois exam scenario during Rowan's Decatur rental duplex file review? Option A. It may be hidden if the seller requests silence. Option B. It is never relevant once the property is listed as -is. Option C. It must be disclosed only after the buyer obtains a loan. Option D. A known material fact should be disclosed rather than concealed. The correct answer is option D. A known material fact should be disclosed rather than concealed. Known material facts can affect a buyer's decision and should not be concealed. A seller's request, and as -is label, or the timing of financing does not eliminate the broker's duty to avoid misrepresentation and disclose material information. Question 17. Taylor signs closing documents for an absent seller under a power of attorney. Which issue is most important? Option A. The authority must be valid and broad enough for the act being performed. Option B. A power of attorney automatically makes the signer the owner. Option C. No written authority is ever needed. Option D. The broker may create authority by verbal approval alone. The correct answer is option A. The authority must be valid and broad enough for the act being performed. A power of attorney gives authority only if it is valid and covers the act being performed. It does not transfer ownership to the signer by itself, and verbal approval alone is not a safe substitute for proper written authority. Question 18. A residential seller in Illinois knows about past plumbing leaks but leaves the disclosure report blank. What concept is most directly tested during Casey's normal suburban ranch home file review? Option A. The buyer's duty to ignore all seller statements. Option B. The seller's disclosure obligations for known material defects. Option C. The lender's exclusive duty to inspect the property. Option D. The appraiser's authority to waive statutory disclosures. The correct answer is option B. The seller's disclosure obligations for known material defects. Illinois residential disclosure rules focus on the seller's disclosure of known material defects. Buyers still may inspect, but that does not make seller disclosure meaningless. Lenders and appraisers do not waive statutory disclosure duties.
Stressed about your non-medical assistant exam? We can take non-medical assistant exam for you remotely and undetected. We always guarantee a pass and payments only after results. To send us an email, scan the code or tap the link in the description and let's get it done.
Question 19. A buyer and seller dispute whether a wall-mounted shelving stays with the property. Which test is most relevant? Option A. Whether the buyer likes the item. Option B. Whether the item is expensive enough. Option C. Whether the item has become a fixture based on attachment, adaptation, agreement, and intent. Option D. Whether the broker wants it included. The correct answer is option C. Whether the item has become a fixture based on attachment, adaptation, agreement, and intent. Fixture analysis looks at factors such as attachment, adaptation, agreement, and intent. Personal preference, price alone, or the broker's preference does not determine whether the item stays with the real estate. Question 20. Harper receives $3,500 in earnest money and places it in a personal checking account for convenience. Which trust-account problem is illustrated? Option A. A lawful automatic conversion of escrow funds into commission. Option B. A required method for handling every earnest money deposit. Option C. A title defect that is cured by recording a deed. Option D. Commingling client funds with personal funds. The correct answer is option D. Commingling client funds with personal funds. Client or customer funds such as earnest money must be handled through the appropriate special or trust account process. Putting the money into a personal checking account is commingling. It is not automatic commission, not the required method, and not a title-recording issue. Question 21. A buyer reviews debits, credits, lender charges, preparations, and cash needed to close. Which document function is being tested during Riley's-Moline single-family home file review? Option A. Settlement or closing statement accounting. Option B. A zoning map amendment. Option C. A subdivision plat approval. Option D. A deed covenant creating a life estate. The correct answer is option A. Settlement or closing statement accounting. Closing statements organize transaction charges, credits, preparations, and cash to close. Zoning approvals, plats, and deed covenants do not perform the same accounting function. Question 22. A sponsoring broker is asked to produce special account records during a regulatory review. Which practice best supports compliance during Avery's Quincy 2-flat building file review? Option A. Deleting old deposit records once the closing occurs. Option B. Maintaining complete transaction and trust-account records that can be examined when required. Option C. Keeping records only in the salesperson's personal email. Option D. Combining all clients into one undocumented cash envelope. The correct answer is option B. Maintaining complete transaction and trust-account records that can be examined when required. Regulators may examine records to verify compliant handling of funds and transactions. Deleting records, relying only on a personal email, or using an undocumented cash envelope undermines record retention and auditability. Question 23. A consumer asks why a state real estate recovery fund might exist. Which purpose is closest during Cameron's Waukegan condominium unit file review? Option A, guaranteeing every buyer a profit on resale. Option B, paying all ordinary home repairs after closing. Option C, providing a limited source of recovery for certain losses caused by licensee misconduct when statutory requirements are met. Option D, replacing the need for broker licensing. The correct answer is option C, providing a limited source of recovery for certain losses caused by licensee misconduct when statutory requirements are met. Recovery funds are designed as limited consumer minus protection remedies for qualifying misconduct minus related losses. They do not guarantee investment profit, pay routine repairs, or replace licensing and discipline systems. Question 24. Quinn signs an exclusive buyer representation agreement and later asks why the writing matters. Which answer best fits exam-tested brokerage agreement principles during Drew's Belleville Townhome file review? Option A. A brokerage agreement eliminates all disclosure duties. Option B. Oral promises always replace signed terms. Option C. A brokerage agreement transfers legal title to the broker. Option D. Written terms help define services, compensation, duration, and the parties' obligations. The correct answer is option D. Written terms help define services, compensation, duration, and the parties' obligations. Brokerage agreements define key business terms and help avoid disputes about services and compensation. They do not eliminate disclosure duties. Oral promises generally do not automatically replace signed terms, and the agreement does not convey title to the broker. Question 25. A buyer pays for the right, but not the obligation, to purchase a property at a set price during a stated period. Which agreement is described during Hayden's Chicago small apartment building file review? Option A, option agreement. Option B, open listing only. Option C, tax deed. Option D, subordination agreement. The correct answer is option A, option agreement. An option gives the holder the right to buy under stated terms without requiring the holder to exercise it. An open listing is a brokerage agreement, a tax deed relates to tax enforcement, and subordination changes lien priority.